one stock that has managed to hold out today. It's up about 4% and that's UFO Moviez. Buzzing has posted a steady Q2. It's seen high advertisement revenue that's helped earnings. We're being joined by Kapil Agarwal, the joint MD of UFO Moviez, to just run us through the quarter. Mr. Agarwal, thanks for speaking with us here on Bloomberg TV India. Run us through what some of the key drivers for growth have been this quarter.
Well, the key margin drivers are basically the growth, overall growth in the advertising revenue, sale of products, and we are also now, as the company is growing, we are hitting we are getting the advantage of operating leverage, because as the numbers are growing, our expenses are not growing in the same ratio. So that is what is actually quarter on quarter, year on year, is enhancing our profitability, the advantage of the operating leverage.
Ad revenue growth in Q2 and traction seen going forward. Any comments you can offer on either of those?
Well, traditionally what we have seen is that the advertising revenue in the first two quarters in the H1 is in the range of 40 to 45% of the annual revenue, and 55 to 60% contribution comes in the second half. So we expect that trend to continue. So the 70 crores of advertising revenue which came in first half should grow in our view.
Can you run us through whether the average number of ad minutes sold per show has really improved, and if it has, and if it hasn't, what kind of levels is it at?
Well, if you see from last year H1 from approximately 2.62 minutes, this year H1 it has grown to 3.85 minutes overall. So this is growing at a very steady pace. I think in 3 years from less than 1.5 minutes, now we are close to 4 minutes. So it is steadily growing. Our target is to actually go to 15 minutes over a period of next few years. So it is steadily growing, and as I said that in the H2, since the revenue is expected to be higher, so this utilization factor will also be higher.
Run us through what your global network performance has been as well as overall performance.
Well, the international subsidiaries, it's a mixed bag. For example, we have operations in the Middle East, then we have operations in the US, Mexico, Israel. So while the Israel and Middle East operations are stable, the BPF contracts have already ended there. So we are concentrating, instead of investing our own money into the network, which in the past was leading to the service revenue, now we are concentrating more on the sale of products. So we are consistently achieving sale of products and fairly good margins on sale of equipment in the Middle East. The Mexico and US operations is fairly recent, so while it was contributing negatively in the past 1.5 years, now it is steadily growing and moving into profitability. So overall, the total global operation outside of India, it's going to contribute positively to the overall growth.
Before we let you go, just run us through the growth target that you're working with for this fiscal.
Correct. So, as I mentioned, overall, the company is out of the major capex phase. When the digitization was happening in the country, a lot of capex was being incurred, and that was leading to higher debt. Now, we have moved from the capex, heavy capex mode, and we are only into the replacement capex mode, which is actually throwing positive cash flow on the table every month. So our net debt is barely just around little over 21 crores in the end of the quarter. So within this year, I think the net debt will be completely wiped out, and we will have zero net debt in the books.